back to another pre-market live stream here. Hope you guys are having a good morning. And as usual, we had another great call out on Monday's live stream. As I was telling you guys, be super cautious with how things are going. We also cautioned you on the weekly newsletter on how OPEX tends to go. In the end, of course, we had CPI numbers that came out a little hotter than expected. Even though positioning was on the bullish side for institutions, this huge unwinding that happened yesterday was mainly because a lot of that positioning was unwinding from those underbelly names that we were looking at. And a lot of the institutions that were kind of switching up for upside positioning and taking all those growth exposure, they started to unwind their positioning at the same time when retail started to panic. And that's what caused this ultimate disaster of what you saw a whole day of selling yesterday. We did get a little try to push up into 39.57, but since this is the third wave down, this is going to be a painful wave. And I think personally, if we lose the 39.10 level or even lower than 3,900 in general, then we are going a long way down into 3,700 to retest these bottoms from July and June. So there is a possibility of a continuation of a pain event that will likely to lead to some kind of capitulation finally, hopefully, before the bull market resumes in late of this year. Now, as you all know, seasonality-wise, this cannot be any more clearer than what we have been showing you for the past 2 months, right? We've been expecting for the midterm election year that seasonality has been pretty wide in terms of expectation, and then in September we have that big drop. And so you can see we have been mentioning this a couple of times over and over again, and now we're finally seeing that little bottom kind of being put in again. And so this is kind of projecting that there is a further pain event here possibility, and then heading into the end of September into October is where we start to see the positioning start to change. And only in October, the first 2 weeks of October is where we might see some kind of a rebound. Okay, so from now till then, it's likely to be a lot of pain, continuation of pain, and a lot of exposure unwinding. And then don't forget that this week $3 trillion of options expire. Number one. Number two, we have FOMC meeting next week, and then I believe PPI numbers would have just come out, right? Didn't PPI numbers just come out? Yeah, it did just come out. But you remember, PPI numbers are not they're not that anticipated, right? If CPI is known, then PPI is pretty easy to figure out. So I'm guessing that a majority of people already priced in the expectation for PPI here, and therefore that's not a market moving news this morning. I know a lot of people, they just like to look for the next news event, and they're like, oh yeah, but we have PPI tomorrow. Well, no, PPI has already been priced in as of yesterday. So CPI came out a little hotter than expected. Now, what does that actually mean for the markets? What's going on? What was likely the culprit here? We needed to first of all talk about those things, right? So the CPI print, and then the what that does for the terminal rate and the Fed funds rate, because immediately after this CPI print came out, the market started selling off. And why did the market sell off? Because now the likelihood of a soft landing, the likelihood of it has just lowered. Okay, we are now looking at a 80% possibility of a 75 basis point rate hike next week. And then also a 20% possibility of a 100 basis point rate hike, which is what the market is now pricing in, along with a possible hard landing, which means that the economy is going to be affected by this inflationary pressures, which is going to lead to more tightening of monetary policy and financial conditions. And the Fed is now pretty much perceived to having to slam the brakes. And this is going to cause, labor markets to definitely crunch, or, we might see some spillover in terms of the economy, going through some kind of hardship. So, that's pretty much what happened yesterday, and that's the reason why we sold off pretty harsh. And it's really interesting because we would have likely to see some selling, even if the CPI number came in softer, to be honest. And I mentioned this already on Monday's live stream. I said that the 75 basis point rate hike was already kind of priced in, right? And we had been talking about that for a couple of sessions already, and I mentioned it on our newsletter as well. That, you know, it may have, you know, arrived early in the morning, but there was already a rally, you know, the past couple of days prior to that, especially in some growth names and such, right? So obviously, if we are in a bear market, it's going to be very difficult for us to reverse out of a you know, this very bearish positioning so easily. We need really green lights all the way. I've mentioned this multiple times. The market only moves strongly in one direction when there's green light, green light, green light, right? And then only do we get that big wave to the upside. Right now, we don't have that. And so every single rally that you see is likely to be faded. Every single rally that you see is likely to be faded. This is not a market to swing trade in at all. This is a scalpers and day traders market. And you should not be holding positions overnight unless you know for sure where the direction is likely to be. A lot of these events have been binary, so they've been either or, 50-50 on either side. And so you really have to take that into account when you're trading these days. It's really, really interesting. So I feel, you know, there's a lot of counteractive things here that could happen in the next 2 weeks. Now, here's what I think, and obviously take this with a grain of salt, because obviously, even though we have a mad accuracy in terms of what we've been predicting so far, I always like to tell you guys, everything that we discuss here is for entertainment purpose. And just take it with a grain of salt, because there's no way that I'll be able to guess exactly what's going to happen. But we have been nailing these guesses pretty spot on for the past 2 months. And so let's just humor me one more time, okay? So what is a likely scenario for us to happen? Now, if we do break and hold below the 3910 level today, right? 3910, or let's just call it 3900. I'm going to bring that down, this line, to 3900 actually, because 3900 seems to be a more reasonable level, right? Somewhere around there. Now, if we do get a break below 3900 and, you know, a hold below 3900 today, and bulls lose this level, this support level today, then a likely scenario is that we are going to flush down. We are going to flush down further. And this further downside is likely going to be where fair value estimates is for SPX again, which is the 3650 to 3725. Now, we have a strong demand zone right here at 3850 all the way to 3960. These two levels have been a level of strong demand, and they are also going to turn into demand because remember, this was a previous resistance here turned into support here, and there could be some kind of a bounce event that goes up into here. But any kind of a bounce that we see getting up into the 4,000 level, right, or the 4,034 level or 4,059 level, whatever this kind of a bounce that we get, is a great entry for another short position as long as the market throws fits. One thing that, you know, you have to keep in mind is we are still in the bear market, and so anything that moves to the upside seems to be a reasonable expectation for a short. And honestly, I do feel like we have the capability to come down into the 3800s at the very least, if we want to retest these this kind of zone over here, which is around 3820 or 3840. So these two levels, 3900 and 3825 roughly, are very key levels for us heading into the next 1 to 2 weeks. Now, getting into these two levels could be very quick. And if we see any kind of a pullback to the upside, the downside exposure should be nice to catch onto, because then the premiums evaporate. One thing you got to keep a look on and keep a lid on is the VIX, because the VIX is pretty elevated here at 27 bucks. And we have mentioned about the VIX before. Remember, 23 is the first alarm, 26 is the second alarm, 29 third alarm, 3150 fourth alarm, and then 3550 is the fifth and final alarm for the VIX. This is volatility at all-time high peaks, kind of going back for a long period of time. Obviously, the only other time that volatility was much higher than this was the COVID crash back in 2020, right? So we don't have like COVID crash era volatility, but you know, we are starting to kind of pivot to the upside here, and we have to keep watching the VIX in order to be sure. Okay, so with SPX, the likely scenario is pullback, sell off. We need to try and hold. If bulls really want to secure this market, they have to start trading above 4,059 or 4,060, which is a lot of ground to cover to pull that back up. So we have to like really bounce here today, and then rally very strongly and bounce somewhere at the 4,100 or 4060 level, somewhere up here, like this, something like this, right? And I don't see that scenario happening just right now because of the way this Elliott wave is set up. It looks to me more like a bigger part of a 3-wave combo here, and this is the 3rd wave. And the 3rd wave, if you study Elliott wave theory, then you know the 3rd wave is the largest wave in any kind of a wave structure. And so I'm really hoping that we don't drop so crazy further down. But, you know, as I said, you have to be ready for both outcomes, okay? When we are trading, we're not in the game of guessing, oh, you know, are we going to go up or down? We are looking at the price action and we are making informed decisions based on an intraday basis. That's exactly what we do. That's exactly how we ended up with our team succeeding through this entire, you know, bear phase, or this so-called bear market time. On a day that the market was so red, a lot of us closed insane profits, right? Look at some of these. Insane, right? $8,000 in profits for Toby here. Myself, on the small account, I closed $1,300 in profits yesterday. $9,000 on Tesla alone. I still have a Tesla put open, SPX put open. We had John opening with some 80% and then 114% trades. Ivan here with about $7,000 in profit. These were all really great trades that were all taken by members in our Discord who have been trading with us and doing extremely well. I really, you know, I'm so proud of some of these members because they've been trading with us for a very long time now, and they're starting to get a hang of it, and I'm so happy, you know, that they're learning and growing with us in this community. So, you know, big shout out to you guys on the EJA Tribe fam. Love you all, and keep up the great work because I think you guys are doing a fantastic job. So, likely down wave. Support is likely to be at 38.24, 3900, and then if we really get down and ugly into 36.50 to 37.25, this could be pretty much heading into October first 2 weeks. So we're looking at somewhere timeline to be around here. So we're looking at a possible drop kind of scenario. I don't know, like maybe, you know, possibly wave up and then a wave down, and then kind of recovery starting over here. And this recovery wave that starts here is going to be the wave or the rally into the end of the year. So this final wave here is the buying opportunity of all buying opportunities that we should look forward to, so that, you know, we can take that upside exposure when it happens. But as of right now, with so much of selling as of yesterday, and then a lot of pricing in, and then all of that happening, the market's going to, of course, digest this move. There's likely to be a sideways or a very minute upward move, and then maybe another fall again if selling appetite comes. And the only way that is going to be played is a pivot break below 39 something here. 3,900 or so. The exact level is this level right here, which is 38.84, if you want to be very precise, which is the low of, excuse me, 5th to 6th September, basically. And so watch that as the pivot break for the next pivot to the downside, which is going to be 38.24, and then below that is all the way down at 37.50 pretty much. So there's quite a few levels here to break, and then we'll see where we can get liquidity and support going up from here. So that's your technical analysis plus macro combo. Sorry that took a while. There was a lot to unpack. I had to you know, give you guys the entire spiel because it's important to not just look at one side. Remember, look at both sides and don't let your bias overly consume you. Now, interestingly enough, I pointed out the NASDAQ on Monday, which was sitting at a very key rejection trend line, which rejected multiple times already, once, twice, 3 times. Now this becoming the 4th. And if we were to also look at the wave structure here, this would be the first wave, second wave, and this is coming the third wave. And the third wave is the largest wave, guys. So if the first wave we got, you know, this movement, and then the second wave we got this movement, then the third wave is typically 1.618 times of the you know, the previous wave. So if you're looking at extension here, right, on the NASDAQ, I didn't put in the 1.618 extension, but I will put it in right now so you can see it. Let's have a look here. So let me use one of these and go 1.61. We'll go make it white. Oh, sorry, minus. There we go. Now, I know this seems exaggerated and crazy, but then the forecast of that wave would set us into 6,000 on NASDAQ, which is really far down. And I personally, I don't know if we're really going to get there, but 7,000 NASDAQ, that's pretty crazy, right? That's pretty much COVID lows, guys. That's COVID lows, okay? I don't know if we're really going to get to that spot, but you know what? Never say never. I don't like to be fear-mongering, but I do think that we will get liquidity pops along the way, and the Fed will step in to calm the situation down at some point. So I don't want to, you know, over-exaggerate, because I don't think that's necessary. But we'll play it as this comes, okay? It's just good to know where the levels are, okay? Now, in terms of other things that I'm looking at, gold, haven't gotten that bounce that we really wanted. On top of that, really not, you know, much of a development on the dollar index, neither. We're struggling to break out here. So we really have to see what the dollar does, you know, in this coming week. The bond markets have been pretty nasty. And, of course, with the bond market being like this, where liquidity is, you know, being sucked out of the system through QT, you can see, you know, TLT here selling off and likely to find demand only at 101. So we have a little bit of ways to go further. That's only going to exacerbate the situation to make it worse. Okay. Yields going higher. What does yields going higher mean? So if bond prices go down, here's simple things for you to know. Bond prices go down, bond yields go up. Bond yields go up, valuations of stocks come down. Okay, that's the interaction of these mechanisms. And because we use bond yields directly in calculations of equity valuations. Okay, if you learn finance, and you will know exactly what I'm talking about. The 10-year yield is considered the risk-free rate for when we are calculating the asset price. And if you use a DCF, or a discounted cash flow, calculation to measure the price of a financial asset, then that discounted cash flow calculation is going to take into account the 10-year yield. And if you look at the 10-year yield, it's been rising. Now, I'm looking at the 10-year bond price here, but if you look at the 10-year yield, here we go. It's been on the up and up. It's almost at 3.4442, and we're trying to break out again, right? So if we end up breaking higher here, this puts downward pressure on equity pricing once again. Okay, and then if the bond prices go crazy, you can imagine that what that is going to do for equity pricing, and specifically for tech. It's going to cause a more disproportionate effect. Okay. So I hope that was helpful. Thank you guys once again for attending today's live stream. If you are here for the first time, you're listening in, make sure you click subscribe, and also smash the like button for me so this video can reach others. Sorry if you keep hearing me cough. I'm still recovering a little bit. And also, just a quick announcement. I'm going to be in Thailand next week, in Phuket. And so next week I will not be holding the live stream. I will be in Phuket, and I don't know how my internet connection will be. I will be bringing my laptop, so I'll give you guys updates on Instagram, okay? And I will announce again on Instagram, like for sure, if I am gonna do a live stream or not. If I can get my internet to be working and it's stable, I will do a live stream from Phuket. Okay. If I can't get my internet to work and it's spotty, like the connection is spotty, then I will likely not stream, but I will give you guys updates on the IG story as usual. So just want to announce that, make sure that you guys know, because I will be traveling to Phuket for a week for a holiday. I haven't taken a holiday in more than 3 years, and therefore this is the first holiday that I'm going to be taking. So I hope that you guys will be following that on the week after. You back in the States or still in Singapore? I'm in Singapore. I'm in Singapore right now. So if you guys have any questions or comments, you want to ask anything, go ahead, put it in the comments right now. Or if you want me to break down a specific ticker, you can go ahead and post that as well. I'll give it a couple minutes for any questions that need to be answered. Semiconductors look absolutely brutal here, but I feel like a bounce isn't coming soon. You know, if we do break this level though, then we're likely to go retest 119, 120 on Nvidia, which is going to be pretty nasty. But we'll see. This is a key level. Nvidia is at a key level here. Nvidia short looks like a very yummy trade if we can get that as a day trade today. I will be watching this pretty closely. Not to mention Bitcoin fell off a cliff again. And Bitcoin's next support, if it loses the 17,000, is going to be all the way down at 12,000-ish. So that's another event, like another liquidity event, which could be a big problem, right? Where investors just get spooked completely. But that would also mean capitulation. So yeah, you know, things are looking pretty grim. Things are looking pretty grim right now. I wouldn't lie. I wouldn't lie. We could see another sell-off event if you know, liquidity and momentum comes back into the market. Okie dokie. Well, I don't see any questions. Are there any questions? If not, I'm gonna end the stream here. For those of you that came in late, or you know, you just want to hear the whole stream again, just refresh this page right after I'm done, and the stream should be up and running right after. In that case, I'll see you guys on Friday. Take care, and thank you for attending once again, and I'll see you guys back again. Peace, guys. Have a good trading session.